Hello ladies and gentlemen, it is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome as always to this video. Guys, in today's video, I'll be explaining ICT's concept of the power of three. Okay, so guys, I want to make a couple of notes before we actually get into this video. Number one, please feel free to watch this all the way to the end. I do highly recommend you guys watch this video all the way to the end. Even if you understand power of three already, there is something that I might say that you might have not heard it in a different way, or I'll explain it in a different way that might resonate with you, that will help your understanding of the power of three better. So guys, I highly recommend you watch this video all the way to the end to gain the maximum potential value for you. And number two, guys, I do have a brand new Discord server open. It is free for a limited time only. So guys, please feel free to join that in the description below, okay? But for now, guys, let's go straight into it and let me explain to you my understanding, my viewpoint of the power of three, okay? So guys, as it says in the name, the power of three has three different concepts within it, okay? Which are, or three different phases I can phrase that as. Accumulation, number one. Number two is manipulation. Number three is distribution, okay? Now, when it comes to this concept in particular, ICT is referencing it relative to midnight New York opening price till the next midnight New York opening price, okay? So he's referencing it across the whole day. And essentially the power of three begins at phase number one, accumulation, from New York midnight open. So say for example, I've got a couple of arrows here just to show you a different version of a candle. So say for example, we begin New York midnight opening price over here at this level here, okay? Now, what happens in the accumulation phase, okay, is that as price continues to move about, it isn't really going anywhere. Again, it is range bound, okay? Now, what does that tell us? Number one, it tells us that it is accumulating buyers and sellers. If price has opened from midnight New York opening price and is essentially going sideways, again, we understand that buyers and sellers are coming into the market every second. So orders are being placed, orders are being put through. This is the accumulation of that. That is the phase of accumulation, okay? How do we know that? Well, because it is range bound. We understand that when smart money places their orders, we do see significant displacement in the market. Have we seen any significant displacement here? No, we haven't. So again, retail are buying and selling. We have orders coming in. So this is why we are accumulating money. We're accumulating liquidity in different areas and we're accumulating orders, which is why this phase is the accumulation phase, okay? The very, very beginning, okay? Now, the next phase in the power of three concept is the manipulation phase. Essentially, this is also known as the Judas swing, but it is the fake move, okay? Again, I know there's going to be questions in this video. How do we know it's a fake move? How can we tell that? How do we know price will go in the opposite direction after that? Again, we have to stack confluences based on what price is telling us from other confluences, okay? So again, we're not exactly going to know that this is going to be a manipulation phase and price will already turn and go the other way upwards, okay? So say, for example, like I said, we have an accumulation going sideways, manipulation, and then of course distribution afterwards. I will explain that. But how do we know that price will shoot up? Again, like I said, you'll have to stack other confluences, okay? Because again, price may not do that. Price might just open here, accumulate, and then just shoot straight down in the day, okay? So again, we have to stack confluences, okay? So again, we're not going to know straight off the bat when manipulation is going to happen. We only know it, of course, once we see the right confluences somewhere down here. Again, like I said, the manipulation phase is the Judas swing. It is essentially when price is going in the opposite direction to the real move. And I'm actually just going to change my arrow to make it a little bit more clearer. So the manipulation phase is when price is being manipulated to come down here. Okay, again, we're just talking about this arrow for now. I'm not going on to this arrow. Price is coming down here. Why? Well, again, price is gravitating towards the orders. So, for example, if price is coming down here, we understand smart money is going to be buying low and selling high, okay? So, price is being manipulated to come down here. What does this do? If price is coming down here, we understand that retail traders are going to think it's a trap, especially if price is coming down very, very fast down in this swing leg, okay? So again, price is being manipulated. You have retail coming in, getting short. Again, when we know, or well, we don't know just yet, we have to stack confluences, when smart money is essentially going to later come in and take the market upwards, okay? So again, this is the manipulation phase of the market when price is going down, okay? So I will actually draw the few arrows for you guys. Again, we've got in red, we're going to have here the accumulation. We've got the manipulation coming down in green. And then we have the distribution phase where price shoots up and shows its real move, okay? I'm going to put that in blue. Now, once we see that and understand that, again, we know what's happened. Price has created a Judas swing, trapped everyone, and then pushed up and distributed its orders. What do we mean by distribution? Well, if smart money is going to be buying low, in this example here, if smart money is going to be buying low, it needs to be selling at a higher price, of course, because they're interested in making profits, as is everyone. So they're distributing their orders as we go up. Okay, previous price action could have, for example, we could have had price action coming down here as we come into midnight New York open over here. Okay, and you'll have stops over here. Okay, so again, what's going to be happening? People that are be getting short over down here, and the breakout traders will want to add buy stops here, above here. You're going to have levels of buy stops above this high. So in the day, midnight New York open, we've had accumulation, manipulation, and distribution. We understand smart money has bought low. What's going to happen here? Breakout traders are going to have buy stops above this high. So when they've got buy stops, smart money is going to sell their positions to the buy stops here and come out the positions up here. Okay, so I hope that makes sense. Again, essentially what we're saying is the power of three is where we're having accumulation from midnight New York opening time, where price is going sideways. We have a fake move or Judas swing going in one direction, which is the manipulation phase. And then we have the distribution phase of where the real move is. Okay. And again, same can be shown here. We can have accumulation happening from midnight New York opening time. Again, this is from here to here. Again, we don't know when the manipulation phase is going to begin. Okay, we can see it at potentially New York, well, London session, for example. Then we have, like I said here, we have the manipulation phase where price is shot up. Okay, again, I draw that in green just to show you guys and give it a difference. And then we have the real move coming down, which is the distribution where smart money is distributing its positions. Okay, so guys, I hope that makes sense. Essentially, this is all happening relative to one whole day, relative to midnight New York opening time. So again, what is happening here? We're opening the day up here at midnight New York open time. Again, an accumulation, manipulation, distribution, and then what happens afterwards? We see price comes back up and then ends around here. Okay, why does it do that? Because again, we are starting midnight New York opening time for the next day over here. Again, we understand that the price is set because price is manipulated. Okay, so guys, I'm going to go into the charts and show you examples of this. So I hope that made sense. We're accumulating positions in a range bound market after the open, midnight New York opening time. Price is being manipulated in one direction before we have the real move, and you normally see a price shoot up or shoot down depending on where we've begun. Okay, so guys, hope that makes sense. We are now going to go into the market and show you this position, these kind of price action happening. Now you can see it on a daily. In fact, I will actually just change this to a different kind of chart so we can see it a bit more clearly. You can see here, price is closed over here. Price is opened over here. What's happened here? We've had accumulation, manipulation, prices come up, and then price has distributed its orders down here and closed over here. You can see that here. Same again on the next candle. You can see prices opened here, prices come up, again, very, very small amount of manipulation, and then distributed down here, come back up and closed here. Okay, same again on the next day. Prices open here, come up, I've had this manipulation over here, this move up here, come down, distributed, and then closed here. Okay, so guys, what I'm going to do is to show this even more clearer to you, I'm going to open up the hourly chart and show you guys this, as I said, in even more detail. So remember, each horizontal line is just representing the New York open, midnight New York opening time. Okay, so say for example, there is quite a few great examples here. So say this is an example here. We can see over here, midnight New York time, guys can see on the axis down below. I will just draw a horizontal line just to show you guys so you can see we open it around here. What can we see here? We can see we've got a range bound open. Prices just come sideways for the first 3 hours, 3 to 4 hours. You can see that is the accumulation phase. Again, traders want to trade. They want to get involved. Orders are happening. You can clearly see when in a range bound market. Prices come down there here. Now you can see price was manipulated down here. And then what can you see? What can we see as the confluence? Well, essentially we've come down into the discounted leg of this swing here. This premium discount. Again, we've got a swing move here from this low to this high. Prices come down into discount. and it's been manipulated. And then you can see what's happened after. There's distributed moves has happened here. We've had distribution afterwards. Okay, why? We understand that smart money has bought low and sold high. Again, like I said, we are in the discounted leg of this swing here. So again, that's another confluence to stack. But again, we can see that we've opened, we've accumulated positions here. I will now remove this premium discount tool. We've accumulated, manipulated, distributed, and come back down and closed over here. Again, we can clearly see that, right? Now I'll find you another example if that wasn't clear enough. We can see again over here. So what can we see over here? I'll just move this right down here for now. You can see midnight New York opening time, okay? Friday the 28th of October. You can see prices opened where? Prices opened over here. What has happened? Again, we didn't really have such an accumulation. Accumulation just happened the day before. Again, we can see we'd have opened, prices come down. We've had a manipulated move, okay, after accumulation here. And then you can see we've distributed. Why? We've seen the real move come up here before prices come down and closed around here, okay? That is what we're saying that this is happening. Again, we can see another example here. What is happening? Price has opened over here. You can see prices come open over here. Again, this horizontal line, like I said, it represents midnight New York opening time. We've accumulated positions from the beginning. We can see that price has come down, okay, again, into a fair value gap. Very small, but it's still there. In fact, if I can draw this out, show you that very small fair value gap down here. Even this can be counted. We can even say that this is the fair value gap that came in. Again, however you guys want to do it, prices come down, wicked into this, and you can see what's happened here. We've had the manipulated move before smart money has distributed its positions up and shown this real move. Okay, so again, this is the Judas swing. From midnight New York open, we've got the fake move, trapping everyone, generating liquidity, and then we've got the real move where smart money again has bought low and sold high. Where is it sold? Again, above this high, where we are going to have a higher time frame buy side liquidity. Okay, so again, like I said, that's the power of three concept. You guys can clearly see what's happening. We're opening, accumulating, manipulating, and then distributing before just closing off the day. Okay, now how can this be used? Again, I know people will say, well, you can see clearly. Even in this day, for example, it wasn't so clear. It didn't happen. It does not happen every day. You can see even in here, this day did not happen. Okay, this day it did not happen. So you guys can clearly see I've given you 3 examples where it's happened, 3 examples where it's not happened. So that is why I said this power of 3 concept should be used as a confluence. For example, in this price action here, you can see that the day before we've had a swing leg up. You guys can see prices started low here, and then we've had the swing all the way to the high here. What can we see? Prices come down into discounted levels. Again, now we're stacking confluences. Price is in a discount on the hourly time frame. It's come into a fair value gap. Is there something in the lower time frame that can suggest for us price to reverse? Is there something in previous price action or liquidity to target? We don't know. We have to do analysis. We have to stack confluences, which is why power of 3 is a concept that has to be used on top of other confluences. Okay, guys? So guys, I hope that made sense. The power of 3 is accumulation, manipulation, distribution. It is typically relative to midnight New York opening times. So again, like I said, this is where we start the day. This is where price is set and it opens. Again, this is for S&P 500 in particular. You have to do your own research for different markets. And then we can see how prices accumulated, buyers and sellers, manipulated price to trap people even more into the short because they see it coming down, and then prices distributing and showing its real move, taking everyone out and proceeding to where it intends to go. Okay, so guys, I hope that made sense. Like I said, if you enjoyed this video, please do give it a thumbs up. If you had any comments about this video, please feel free to write it down in the comment section below. Again, I personally use this concept as a confluence on top of other confluences. Don't just use it just to trade as its own trade, as a trade idea in itself, that you just see a potential accumulation and manipulation. Price doesn't have to do that. Price could have just shot down here afterwards in this example here. So again, you have to stack your confluences. Okay, guys? So guys, like I said, I hope you enjoyed this video. Hope it brings you value, and I'll speak to you again very soon.